CNBC is unveiling our second annual Financial Advisor 100 list. The firms on that list represent roughly $485 billion in assets under management. They were ranked using a proprietary methodology developed by CNBC in partnership with data provider AccuPoint Solutions. Key criteria including total years in business, average account size, and total accounts under management. Joining us now, the number one firm on that list, second year in a row, Salem Investment Counselors, represented by its president, David Rea. David, welcome back. Congrats. Nice to see you again.
Thank you, Scott. It's great to be back. Thanks. It's wonderful for us.
Must be doing something right if you're here 2 years in a row.
I hope so. 41 years here of doing it, working hard, and doing what we know, which is serving our clients well and picking great long-term stocks. So, yeah, we think we're doing some things right.
All right. Yeah. Now's a good time to have this conversation, too. Just give me a broad view of the market before we dial down into some names.
Yeah, we think probably like last year, the market's okay. You could argue that on some metrics, it's expensive. You know, PE, price to sales might be a little high. Price to cash flow might not be. But when adjusted for interest rates where they are, it seems fine. You know, we're looking at an economic reopening, I think. We're looking at probably some good science on the horizon. Probable vaccine, probable treatments, and we're looking at a tremendous amount of stimulus in the system. So we think the market's fine.
It looks to me from the places that you like and dislike and the positions that you have, you're not a huge believer in a rotation away from this growth trade or tech trade into a lot of the value places, right?
No, I think we're sticking with momentum. You know, like we talked about last year, we've owned Apple for over 10 years, Amazon for 4 or 5, Microsoft for probably 25 years. So we are really long-term holders of some of these wonderful companies, and we've been looking around for new things to do. You know, this year we early in March added several names in the housing area. I think that's a longer term trend probably. But by and large, we are sticking with those large cap growth stocks that we've owned for a long time.
Lennar is one of those housing names. I mean, that space has been red hot, so that was good timing on your part. Apple, Microsoft, Amazon, Alphabet, Facebook. You know, it's obviously been top heavy in the way that those stocks have moved. Certainly early on in the year for the most part of the year. Now they are off a fairly decent amount from their highs. Do you worry at all about this move higher in rates and then that trade falling in any way, shape, or form out of favor?
Not too much. I think if we get a move in rates, we probably means the economy's getting better, right? So that probably bodes well for those companies. And we do have, you know, Berkshire's a large holding, Pepsi's a large holding. So it's not like we are, and we own 2 of the major banks, Bank of America and JP Morgan. So we try to have a pretty diverse portfolio that can maybe do well under all kinds of weather, if you would.
Yeah. What's your most recent buy?
Most recent, I can tell you probably the most recent, like 4 buys. Pinterest we added 3 or 4 months ago. Green Brick Partners in the housing area, Fiserv, and KB Homes probably 2 or 3 months ago.
Yeah, playing a lot of the themes that have been working, as you said.
Yeah.
I have a top 100 advisor with me on the committee today. I'd like to bring into our conversation too. Rob Sechin, you have a question for Mr. Rea?
Yeah, I mean, when you think about the magnitude of the move in some of these valuations, how do you think about managing risk as we come into uncertain environments for your clients? Or is it more of a hold-through methodology, or do you pair, reposition, raise cash? How do you think about that?
Yeah, that's a great question. And as somebody told me early in my career, it's easy to buy stuff. It's hard to know when to sell it. So the way we manage risk is if you think about the stocks that we just got done talking about, Apple and Microsoft and Amazon, you know, those have grown so much that they get to be outsized positions for clients. And so we pare those back. We really haven't sold a major position for a while, but if we've made a mistake or something has run way out of favor, we'll sell it. But typically we are paring back positions. And then, like this year, we might have pared back some Apple or Amazon and bought some housing names or social media names for people. So it's more that than in our 41 years of being here, we've really only probably had 2 or 3 times that we thought we could make like a market call. So it's more paring back risk.
David, I appreciate it. Congratulations to you and your firm. And let's not wait another year to have a conversation about the markets, all right?
Let's do it anytime. We've got a great firm and a great client base and wonderful staff. So anytime you guys want. Thank you so much.
All right. You be well. Best to the folks down there.
Too.